Welcome to The Explainer. Today, we're unpacking a seriously fascinating framework from the AgroQuest NG Academy, all about agricultural wealth creation. But look, I want to treat this explainer a bit differently. Let's not make this a one-way lecture. Let's make it an open discussion, a space for you and I to really challenge our assumptions together, okay? Because today, we are going to completely rewire how you look at agriculture. We're stepping away from the physical, everyday act of farming, and we're diving headfirst into the strategic, highly structured world of investment intelligence.
I'm going to kick things off by challenging you with a pretty stark warning from the course's founder. It goes like this. Most people lose their money in agriculture long before they plant their first seed. Literally before a single seed hits the dirt. Why? Because your capital actually vanishes in your mind first. So many people treat farming like this get-rich-quick gamble, or just a highly emotional hobby, rather than a cold, calculated system. They jump straight into the field, while it's wide open, driven by sheer excitement or social pressure, relying on incredibly weak data and totally emotional decisions.
So let's pause and self-reflect for a second. Ask yourself honestly, do you currently think like a farmer, or do you think like an investor? It's an absolutely critical distinction. A farmer wakes up and asks, okay, what should I plant today? An investor wakes up and asks, what asset am I building here? Exactly what capital is at risk? And how long is that capital locked up? An individual can easily farm without thinking like an investor, but there is absolutely no way to invest wisely without structured thinking.
All right, let's get into Section 1, the mindset shift.
Think about the traditional farmer for a moment. Their entire focus is heavily weighted on production, like how many bags of yield can they physically squeeze out of the ground. It's an activity-based approach. It's all about hard work, blood, sweat, and tears. Now, contrast that with the intelligent agripreneur. Their focus is completely different. It's on value. They're asking how much actual wealth is being created here. Their approach is systems-based. They rely on leverage, incredibly strong frameworks, and calculated risk to build scale and sustainability. It's a total paradigm shift.
Let me ask you this directly. Have you ever equated activity with intelligence? Have you ever thought, well, if I just sweat more and work harder, I'm guaranteed to succeed? It's a really dangerous myth. Effort is absolutely vital, for sure, but effort alone is finite. It's exhausting. Assets, things like healthy soil, robust networks, highly efficient equipment, those are the real wealth builders. Those are the things that work for you while you sleep. We really need to stop glorifying effort just for the sake of effort.
Which brings us to Section 2, the 5 capitals.
When you hear the word capital, your brain probably instantly jumps to cash in the bank, right? But the source material radically expands this definition, and it's brilliant. Capital is actually this vast, interconnected web of resources. We're talking both tangible and intangible things that a farm absolutely needs to survive deep uncertainty. If your only move is checking your bank balance before jumping into an agricultural project, you are already setting yourself up for failure.
So, let's break down these 5 capitals. First up, financial capital. Honestly, that's just the fuel. If your engine is completely broken, pouring more fuel in just creates a bigger fire. Second is natural capital. Your soil, your water, the underlying biology. That's your irreplaceable foundation. Third is human capital, which is the logic and the skills of your team. Fourth, and this is huge, is social capital. This is your shield. It's the trust and the community relationships that act as your insurance policy when things inevitably go wrong. And finally, fifth is physical capital, representing the actual tools and infrastructure you use. True intelligence is knowing exactly how to leverage one of these capitals to build another, without always having to reach for your wallet.
Okay, time for a little honest internal discussion. Which of those 5 capitals do you usually ignore? Be honest. Do you pour all your financial capital into a project, but totally neglect your social capital, leaving yourself completely vulnerable to community disputes? Actually, a project built with maybe 20% financial capital, but 80% social capital is often way more resilient than the exact reverse.
Moving on to Section 3, risk and uncertainty.
We have got to clear up the crucial difference between risk and uncertainty. They are not the same thing. Risk is measurable exposure. We have historical data for it, things like seasonal pest cycles or, past rainfall patterns. We can literally calculate the probability. Uncertainty, on the other hand, represents the unknown unknowns. These are totally hidden, completely unpredictable events. Think of a sudden government policy shift or a sudden border closure. There's absolutely zero data for these. Navigating uncertainty requires sheer systemic resilience and sharp human judgment.
To really wrap our heads around this, think about mapping this out on a grid.
You want to separate the high-frequency, low-impact daily noise, like those weekly market price fluctuations that you basically just monitor, from the rare but totally catastrophic threats, like, say, relying entirely on a single buyer who might just suddenly go bankrupt and exit the market. You absolutely need to know which category your project's vulnerabilities fall into.
A lot of new investors come into this space saying, okay, I want zero risk. But listen to me, zero risk simply does not exist. No way. In fact, even if you choose to just sit on your cash and not invest at all, you carry the risk of inflation quietly eroding your capital. Avoiding risk completely just leads to stagnation, but ignoring it leads to total collapse. True investment intelligence is about managing your exposure, intelligently structuring your entry, and building in strong buffers.
Ask yourself right now, have I confused frequent noise with true danger? Are you tossing and turning at night, losing sleep over highly visible, everyday operational hiccups, while completely ignoring a massive, hidden, systemic danger that could actually bankrupt your entire operation? It's time to align your focus with actual severity.
All right, Section 4, Mapping the System.
You've got to stop thinking about your farm in isolation. A farm is not just a random piece of land with some crops sitting on it. It is a highly complex ecosystem. It's this living, breathing, interconnected loop where your inputs, your biological processes, the open markets, and human choices are constantly interacting and creating feedback loops. In a complex system like this, fixing one isolated problem over here can easily create a massive bottleneck right over there.
Imagine a continuous loop. Notice how your capital beautifully compounds when the whole system is healthy. Your inputs lead to solid production, which generates revenue, which then allows for reinvestment, growing your capital even further. But, and this is a big but, it collapses entirely if even a single link in that chain snaps. If you massively increase your production but you haven't figured out your storage or market access, the whole cycle just falls apart. Your system's performance is literally limited by its weakest link.
And this brings us to a myth we absolutely must dismantle today. Yield does not equal profit. Say it with me. Yield is simply a biological measure of output quantity. Profit is the financial measure of the surplus you have left over after all your systemic costs. You could literally harvest a mountain of maize, 100 bags of the stuff. But if transport costs suddenly spike, market prices tank, and post-harvest losses eat away at your product because of bad storage, well, your amazing high yield just resulted in a negative profit. Value is biologically created, sure, but it is very often systemically lost.
I want you to think critically about your own situation right now. Where does value leak the most in your local agricultural system? Where is the money dripping out of the bucket? Is it during transport? Is it a total lack of processing capabilities? Or maybe it's a heavy dependency on middlemen? Intelligent investors don't just stare at the dirt to see where crops are grown. They look at the entire chain to see exactly where the hard-earned value is trapped or lost, and they solve that specific constraint.
Let's bring it all together in Section 5, the final call.
Before you ever open your wallet, this course insists you pass your brilliant idea through the 7 pillars of decision readiness. You absolutely must audit your plan. Ask yourself, is there true sustainable value? Are you looking at the reality of profit, or are you just blinded by potential yield? Have you mapped both the visible and the invisible risks? Have you relentlessly audited your assumptions against hard, cold evidence? Have you viewed the whole system to find those sneaky bottlenecks? Does it pass an ethical filter, meaning does it preserve human dignity and natural capital? And finally, are you taking phased action? Like, are you running a small pilot before you try to scale the whole shebang?
Once you run that audit, you are left with 4 dignified outcomes. You either proceed, pilot, pause, or drop. And I really want to emphasize this next point because it's absolutely crucial. Choosing to pause or completely drop a project is often a massive capital-saving win. Success in this framework might mean making the hard choice not to invest yet. You save your capital today so you can actually grow it intelligently tomorrow.
Let's just reinforce the core philosophy we've been unpacking in our discussion today. Intelligence must precede analysis and planning. True agricultural success, it doesn't begin with a fancy spreadsheet. It certainly doesn't begin with a brand new tractor. It begins with hard, structured thinking. It begins with auditing your own assumptions and deeply understanding the complex reality of the system before you ever deploy a single resource into the field.
I'm going to leave you with this final, somewhat provocative journal prompt to wrap up our explainer today. Based on everything we've challenged and unpacked, from the 5 capitals to mapping system bottlenecks, what will you never do again? Seriously,
Will you never again mistake yield for profit? Will you never again blindly invest without first auditing your social capital? Take this structured thinking, profoundly change your investment behavior, and go out there and start building truly resilient wealth. Thanks for diving into this with me.